You know, the world of meme coins is it's a wild, unpredictable place, right? Fortunes can pop up and disappear in a blink, and it's often all based on a viral joke. But every once in a while, one token makes a move that is so big, you just have to stop and take a look. Today, we're doing exactly that. We're breaking down the anatomy of the Wiki Cat Coin surge. Okay, get this. In just 30 days back in August of 2025, Wiki Cat Coin, WKC for short, shot up over 1,050%. No, that is not a typo. At a time when the rest of the crypto market was kind of sluggish, this one tiny token just exploded. So that just begs the question, right? How does a coin basically go from zero to hero overnight? And maybe the more important question is, what happens after a surge like that? Let's dive in. All right, so let's tackle that 1,000% question head on. What in the world could make a price jump that high, that fast? Well, to get to that, we first have to understand what WikiCat even is. So what exactly is this thing? Well, if you look at their own description, WikiCat, or WKC, is what they call a deflationary meme token. It lives on the BNB chain, and its main goal is to build a kind of peer-to-peer NFT club for everyone who holds the coin. Yeah, so let's pop the hood and see what this thing is all about, what are its basic parts, and its purpose. Okay, so here are the key things you need to know. The main idea is to build a whole ecosystem around NFTs. But, and this is crucial, just like Doge or Shiba Inu, its value really comes from the community, what they all agree it's worth. Interestingly, it was first made just to teach a DAO, that's a decentralized autonomous organization, how to create tokens. And finally, and this is a really important detail, over 81% of the total supply has been burned, which means it's gone forever. That creates scarcity. All right, now we get to the main event, the anatomy of that massive surge. What were the exact ingredients that came together to create this perfect storm of buying? Well, from what we can see, it looks like a four-part recipe for a mega surge. It all started with a market trend called small cap rotation. That led to a technical breakout on the charts. From there, you get a huge surge in trading volume, and it was all topped off with a healthy dose of pure speculation. Let's look at each one. First up, you gotta look at the timing. It was pretty much perfect. There was this wave of money moving away from the big players like Bitcoin and Ethereum. Investors were looking for something smaller, riskier, but with the potential for much bigger returns. WikiCat was just sitting there, ready to catch that wave. Next, the technical signals just went wild. The 14-day RSI, which is an indicator that tracks how fast prices are moving, hit 94.57. Now, to give you some context, anything over 70 is usually considered overbought. So 94, that's just off the charts. It's a huge sign of absolute buying frenzy. At the same time, another indicator, the MEXC, was showing strong upward momentum, meaning the rally was actually picking up speed. And that brings us to the fuel that was poured on this fire. As the price started to tick up, the trading volume just went vertical. We're talking a jump of over 470% in a single day. This is classic FOMO, the fear of missing out in full effect. Everyday traders see the charts going up, they jump in, and that pushes the price even higher. And the last piece of the puzzle? Pure, unfiltered hype. Rumors started swirling, just gossip in online communities, about a potential listing on Binance, which is one of the biggest exchanges on the planet. For a tiny coin, even the idea of a Binance listing can be enough to send its price to the moon because it opens the door to millions of new investors. But as anyone who's been in this space for a while knows, what goes up that fast often has to deal with gravity. So let's shift gears and look at how the story flipped and the inevitable pullback began. You know, people who watch the charts for a living were already waving red flags, even at the peak of all the excitement. This quote from an analysis on August 20th says it all. The token is very overbought. It suggests that a 30 to 50% correction is imminent. The warning signs were right there in the data. So why did everyone think a pullback was so likely? Well, it boils down to three big reasons. First, thin liquidity. Imagine trying to sell a giant yacht in a tiny puddle instead of the open ocean. A single large seller can make huge waves and just tank the price. Second, extreme volatility. Remember how 81% of the supply was burned? That makes the remaining tokens super sensitive to any market shift. And third, it's simple human nature, profit taking. Traders who got in early saw their chance to cash out on those massive gains. And this is where you get to the heart of the matter with pretty much every meme coin out there. It's this constant battle between what it could be and all the things that could go wrong. So let's lay out both sides for Wiki Cat's future. Okay, so on one hand, the bulls, they're hoping that if the project actually builds out that NFT ecosystem, it could create real, actual utility. A passionate community could keep the dream alive. And of course, if that Binance listing ever actually happens, it would be a total game changer. But then you have the bearish reality, and honestly, it's pretty sobering. The charts were screaming overbought. That thin liquidity makes it incredibly fragile. And that Binance listing, it was and still is just an unconfirmed rumor. And hype? Well, hype can disappear just as fast as it showed up. So let's pull back for a second, because the story of Wiki Cat, it's not really just about Wiki Cat. It's a perfect case study for understanding the whole meme coin dream and the very real risks that come with it. Okay, brace yourself for this number, because it comes from an academic study and it's pretty wild. This study found that among the meme coins that saw huge returns, we're talking over 100% gains, a mind-boggling 82.8% of them showed signs of artificial growth. So what does that even mean? Well, the study pointed to a tactic they called liquidity pool inflation, or LPI. Think of it this way. Manipulators find a coin with thin liquidity. They make a few small strategic buys. But because the trading pool is so shallow, even those tiny purchases cause a huge artificial spike in the price. That creates the illusion that something big is happening, which lures in other investors who get that FOMO feeling. So now, think back to the WKC story we just went through. The thin liquidity, the sudden spike in volume, the intense hype, it fits that pattern perfectly. It really is a textbook example of a speculative rally, pushed forward by that perfect storm of market trends and pure hype. When you boil it all down, it's a story about three things: hype, hope, and a whole lot of risk. It pretty much captures the entire essence of the meme coin world. And all of this leaves us with one big, lingering question. Are meme coins like Wiki Cat the actual future of community-driven finance? A whole new way for people to create and share value together? Or are they just the latest chapter in the very, very long history of speculative bubbles? The answer to that is probably still being written.